Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jesowshek, CPA.
Hello and welcome back to another episode. Today's topic is, how are my assets taxed when I die? And now let's be honest, I just like talking about death as much as you, but we need to be realistic and understand that someday it will come. Okay, enough of that sadness. Now let's just talk about what you need to know so that you can properly plan for your family. Now, if you have not checked out the items from our estate planning mini-series that we've did the past 3 weeks, definitely check those out as well. We had what is a last will and testament and why is it important for business owners. We had what is a power of attorney and what healthcare documents do I need in estate planning. And finally, we had what is a revocable living trust and why is it important for business owners. Now, for the discussion here today, we're going to be focusing on the federal side, but you're also going to want to check with your specific state, as there are about a quarter of the states that have some sort of estate tax or inheritance tax that you're also going to dive into. But again, the bulk of what we talk about today is going to be on the federal side specifically. So let's first talk about, what is inheritance tax and what is estate tax. So an inheritance tax is the tax you pay as a beneficiary when you inherit wealth from somebody else. There is no federal inheritance tax, but some states do have one. So something, again, to consider. Again, an inheritance tax is the tax you pay as the beneficiary when you inherit that wealth or you inherit those assets. An estate tax is a tax paid on the wealth or on the estate of an individual's assets upon their death prior to distribution. So an estate tax would be, we have a death, there's a tax paid, and then those assets are distributed after the fact. Essentially, at the federal level, you as the beneficiary of an estate would not pay any taxes, but there may be a tax paid on those assets prior to you receiving them as a beneficiary. And again, at the state level, you might want to check with your specific state regarding any kind of inheritance or estate tax there. All right, so when does estate tax matter? And here's the good news. The IRS has an exemption, at least in state for tax year 2022, of $12.06 million. So this basically means that if the value of the estate of a deceased individual is below $12.06 million, you do not need to worry about any estate tax at the federal level. The $12.06 million number is based on the fair market value of the estate at the date of death. Now, there's more good news. If you are a surviving spouse, basically your spouse died, but you're still alive, the estate tax also does not come into play until your death. So let's say you're married and your spouse dies and your estate is worth $15 million. Upon the death of your spouse, there would be no estate tax. The estate tax would not kick in until you also have passed. Now, as part of this estate tax, and as we look at different things, there's often this idea of gifting. And oftentimes a gift is something that's going to happen prior to death, or that something you can be doing every year. So a question always pops up. If I gift assets or money to an individual, is that taxed? And again, fortunately, the IRS has an annual exclusion. In 2022, that number is $16,000 if you're single, or $32,000 if you're married. And that exclusion is per person per year. So this means if you give a gift to an individual in a single year under the exclusion, you have nothing to worry about. There's nothing to report. There's nothing to be concerned about. Now, this can be more powerful than you think. Let's imagine that you're married and have a child that is married. As a couple, you could gift your child $32,000. That'd be 16 as yourself and 16 as your spouse, for a total of $32,000. You could also gift their spouse, because that's another individual. You could gift them $32,000. So that means that you could give your married child and their spouse up to $64,000 per year without having to worry about anything. And that could be something that you could do every single year. So again, this is an opportunity when we look at that estate tax of $12 million, you could be gifting money throughout the time. As long as you stay under that exclusion, there's nothing you have to worry about. Now, the question that pops up is, what happens if I go over that? What if I gift them more than that? The good news is traditionally not too much happens. If you give over the annual exclusion, those gifts are going to count against your unified credit, and you must report them to the IRS using Form 709. However, there's not going to be any actual tax on that gift until your lifetime taxable gifts exceed that $12.06 million. Again, that's a 2022 number. So if you give over that allowed $32,000 per person as a married couple, $32,000 per person per year, it's not necessarily taxed unless you exceed that overall lifetime gift of 12.06. You will have to file that on Form 709, but if you stay under those exclusions, you're totally fine. Now, another thing to think about is that you can actually gift above the annual exclusion of that $32,000 if you're married and avoid the form filing if it is paid directly to an education institution or a healthcare provider for tuition or medical expenses, respectively. So let's say you want to give some money to your child because they're going to school. If you give that money and pay it directly to the institution instead of to them, you can go above that annual exclusion. Now, a lot of times people come up and say, how do I minimize estate taxes? How do I ensure I can minimize that? And again, as long as you're under the $12.06 million, again, that's a 2022 number, you do not have to worry about it at the federal level. The number one thing you can do if you are above or near that number is to try and get below it. And you can do that by taking advantage of that annual gift exclusion. Ultimately, if you're going to be around that range or much higher, you're going to want to consult an attorney and a tax advisor that can help set up a plan to ensure that your wealth is preserved and avoid as much taxes as legally possible. The least thing you want to do is earn all this wealth throughout your career and throughout your lifetime and then have to pay a bunch of taxes on it and have much of that be diminished by the time it reaches your family members. So if you're in that range or much over it, definitely work with a tax advisor, work with an attorney to set up some plans ahead of time that can help minimize that. Now, a proper estate plan for wealthy individuals could include various different things like types of trusts, annuities, life insurance structuring, various different gifting options, and so much more. So again, if you're in that kind of wealth category, make sure you reach out to someone to help work with you on that. So let's just do a little summary of estate taxes. Be very aware of the IRS exemption amount that is constantly changing. This number is something that changes on a yearly basis. It's something that changes with various different tax acts and laws that get put in place. For 2022, that magic number is $12.06 million. If the estate is under that amount, you likely will not be subject to estate taxes on the federal level. Now, again, you're also going to want to check with your specific state and see what their limits are and whether your wealth or estate may be subject to estate inheritance or estate tax. If you're above these exemption amounts, hire professionals to help you navigate this and determine a plan to preserve your wealth for your heirs. Do that now. Now is the time to be doing that when you can properly plan for it, because once the death happens, much of that planning is out the door. Another item, generally life insurance proceeds that you receive as a beneficiary are not included in your gross income. Now, when we talk about this estate and death, ultimately, no one wants to talk about death, but as we always know, it is inevitable. Take the time to sit down and properly plan and then move on. Enjoy your life. Enjoy the life that you're living now in the presence, knowing that you're taken care of. You've done the planning. You have the things in action to make sure that you're protecting your wealth and your family after the event of a death. And again, properly planning does not just involve the estate tax, but you also want to think about your will, your power of attorneys, a potential revocable living trust, which we talked about in the previous weeks. These are items that are going to be vital to ensure a smooth distribution of assets, regardless of your wealth level. So basically the exemption amount relates to taxes, but you can save your family a lot of money, pain, and stress by properly setting these up, and that is going to be important at any asset value, both big and small, regardless of your wealth. It's important to have those documents. So, when we think about this estate tax, and you might be like, well, I'm way underneath that value, so I have nothing to worry about. The thing is that even if you're under that value, you still have to distribute your assets. And if you don't have the proper documents that we discussed the past couple weeks, that's going to make it very difficult. So again, if you have not checked out the past 3 weeks episodes, what is a last will and testament, what is a power of attorney, and what is a revocable living trust, definitely check those out, because these are going to be some of the documents that all come into play prior to ever even thinking about the estate tax. Having these documents set up is going to help protect, make sure that process goes smooth, and then the estate tax is going to be something that we're going to plan on if you're over that exemption amount. So hopefully I was helpful. We also are going to be having Andrew M. Ayers on our tax minimization program, where we kind of deep dive into some more estate planning and in setting up those documents and those various different items. So if you're not a member of our tax minimization program, take the time to check it out now. We have a library of tax strategies and implementation guides. Learn about all different tax saving opportunities. We have a stress-free bookkeeping training program. We do monthly group trainings where we deep dive into different things. A private Facebook group. We also have a bunch of partners that we work with. So if you're looking for a retirement plan or looking for insurance or various different things, we have partners that we've vetted that we can introduce you to. And again, one of my favorite things is you have unlimited access to our team for general email, tax, and accounting questions. So think of it as about having an accountant in your back pocket. So if you want to check out our tax minimization program, you can go to taxsavingspodcast.com/tax. I also want to remind you, we have our Small Business Tax Savings Summit coming up. That's going to be June 14th and 15th. That's a virtual event. Really excited for that. If you are a tax minimization program member, that'll be included in your subscription. Otherwise, you can sign up just for the summit. Go to taxsavingspodcast.com/summit. Use the code PODCASTTAXES, and you'll get $100 off of that registration. And finally, one other reminder, we have a webinar coming up. This is a free live webinar on May 4th. It's the 2022 tax strategies to ensure that business owners pay the least amount possible. Definitely join that. Check it out. You can sign up for that at taxsavingspodcast.com/webinar. So hopefully this was helpful. I know there's a lot of questions we get asked in our free Facebook group, which, by the way, if you haven't joined yet, just go into Facebook, type in Small Business Tax Secrets. But we get a lot of questions about this estate tax and various different things there. So we wanted to do a quick episode on it to kind of let you know what comes into play, when does that come into play. And again, just be aware of these numbers. They're constantly changing with different tax laws and various different things that's changing as well. So thank you again for listening to another episode, and I will see you all next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.